Good morning, good morning, good morning. How you guys doing today? It is the big day. Everybody's been waiting for this day all week. NFP, non-farm payrolls. Why does everybody care? Well, because it usually puts some volatility into the markets. So that means markets are going to move, and traders love to trade big volatility. Well, I don't like to actually trade the volatility the minute that it takes place. What I like to do is try to understand what the volatility is likely going to do. Because as I've mentioned before, there's always a storyline that is taking place with price. Always. No matter what. There's always a story. And if you can determine what that story is, which is what we do at the school, then we can figure out what is likely going to take place, or at least get very close to figuring out what is likely going to take place, because sometimes it's not very easy. So we have the euro US dollar, and we've been tracking this one for quite some time. And so I'm just looking at CNBC, and this is the headline that I see. Okay, this is the headline that I see: job gains expected again in March. Here are all the things to look for in Friday's report. So now it's got a little article talking about what you should look for. But basically what they're saying is they're expecting gains once again. And that's an interesting thing. Very interesting, because if you follow us in our Telegram channel, you'd know that we have some thoughts on that. And let me just bring up those thoughts here. I posted on our Telegram channel yesterday, I believe. This was my thoughts. Okay, I was looking at non-farm payrolls. I was looking at price action. I was trying to determine what is likely going to take place here, and does it fit within the context of the storyline? All right. This is one of the reasons why we call the system that we use to do analysis and to locate trading opportunities the Sherlock system, because it's like Sherlock Holmes comes to the scene of the crime, has to look at all the evidence, and he has to paint a picture of what took place leading up to that moment. And if he can do that, then he can solve the crime. Well, it's the same thing that we have to do when we are looking at price, because when you understand what's really driving these markets, all you have to do is follow the storyline. So, I said NFP coming out tomorrow morning at 8:30 Eastern Standard Time. Previous was 275,000. Consensus is 200,000. How would you like to bet the number will come out below 200K? Now, why would I say that? Why would I think the number is going to come out below 200K? Well, let's take a look at non-farm payrolls. Okay. If you're new to trading and you're wondering what the heck is non-farm payrolls, well, here's an explanation. You can go on MyFX book and you can click on the calendar, click on non-farm payrolls, and this is the explanation that you get. A monthly employment report produced on the first Friday of every month. Non-farm payrolls have a significant impact on the value of the US dollar, the bond market, and the stock market. As per the Bureau of Labor Statistics, the current employment statistics program conducts surveys of approximately 141,000 businesses and government agencies, which represent approximately 486,000 individual work sites, in order to provide detailed industry data on employment hours and earnings of workers of non-farm payrolls. So this is non-farm jobs. Okay. And what's really neat about this is you could see what the previous reports came out, what the consensus was, and what the actual results were. So the last report that we got was right here. Okay. This took place March 8th. The consensus was they were expecting 200,000. Okay. What it actually was 275,000. So it's above, which would be considered a bullish thing. Okay. Again, if you look here, it tells you what you should be thinking. Okay. Here's the consensus here. And they're telling you a higher than expected figure should be positive for the US dollar, while a lower than expected figure should be seen as negative. Okay. So when it came out at 275, which was above the 200K consensus, that was considered as bullish. So going back to what I was saying, previous was 275, consensus is 200. How would you like to bet that the number will come out below 200? Why would I expect it to come out below 200? What would be the reason why I would think it's going to come out below 200? Well, the reason being is because it would be considered negative for the US dollar, all right? It'd be considered negative for the US dollar, which would be positive for the euro. Now, one of the reasons why I'm suspecting it's going to come out below 200K is because if you take a look at the euro right now, what phase are we in? When you look at retail traders and the positions that they've been accumulating, what took place? Okay. I want to point out something very important for you. And I want you to pay very close attention to what I'm about to show you. You guys can see my 4-hour chart here. You can see that I've been plotting the positions of retail traders all throughout price action. Now, I want you to see that just recently price was down here. And since then, we got a very dramatic rally all the way up here. And if you take a look at that incredible rally, you'd see that it was a lot greater than the rally that we previously had over here. Okay? Now, for me, when I'm analyzing the charts, I'm applying the Sherlock analysis process. I'm coming to the crime. I'm coming to the scene of the crime, and I'm asking myself, why did such a large rally take place just recently from the beginning of April to now? Why did it happen? Because based on supply and demand dynamics, the rally could have been easily short-lived, half of this rally. But there was a specific reason why they wanted to rally it this much. So when I start to look at the previous price action and the previous positioning, I take a look at the previous rally up here, and I see that at the peak of this rally, they were only able to lure in about 63% short, okay? That means retail traders managed to get about 63% at the peak of price short, which means there's not that many short positions, okay? Now, on a previous show, I was talking about how the CFTC sentiment for the euro was showing us signs that they were reducing long positions. You remember that? If you look at the long positions, they're reducing them. 213, 205, 200, now 180. Remember? And if you look at what has been transpiring since the beginning of the year, 92, 89, now we're at 148. So there's clearly a shift going on here. This is why I use the CFTC data, because it's another piece of evidence to put together to give us an understanding of what is taking place in the markets. So we're seeing this, and we've been seeing this for many weeks now, this shift in positioning from reducing longs to increasing shorts, all right? And what was I saying on the other episode that we did? Well, where are the banks going to get these short positions from? Because remember, they're supposed to facilitate our trading, right? So if we happen to accumulate a massive short position out of our own doing, right? And then we decide, let's offload these shorts because it doesn't seem like a good idea to be short the euro. What would trigger my response to think maybe it's not a good idea to be short the euro? I've already accumulated up to 93% short the euro. What would convince me that it's probably not a good idea to hold a short euro? What do you think? Right? I don't know, maybe, I'm surfing through the websites and I'm looking at CNBC and I'm like, what should I do with my short? And then I read this article, job gains expected again in March. Oof. Oh, maybe I should I don't know. Maybe I should. I don't know. Maybe I should hold my position, get rid of them. What do I do? Let me see. What else? What other news is there? Well, I find this one the most interesting. Job gains expected. Okay. Job gains expected. So if there's job gains expected, what would that mean for the dollar? Stronger, weaker for the euro? Are they looking to get people to add more to their shorts at this point? Well, I came across an article on Bloomberg, and I think this one is pretty. This one nails it pretty head on. A monthly report of U.S. employment is set to reveal a downshift in hiring in March amid muted wage growth, according to Bloomberg Economics. Look at this. Employers probably added 187,000. What does that tell you? Below the number that they're the consensus right now. Remember consensus, what it is? 200. Employers probably added 187,000 workers to payrolls last month following February's 275. So Bloomberg's already setting you up for this expectation that it's going to be below. And if it's below, that'd be considered negative for the US dollar, correct? Wouldn't that be considered positive for the euro? So if I was holding a massive short position on the euro and that negative number came out for the US dollar, would that not be considered positive for the euro? Would I not be thinking maybe I shouldn't be holding all these short positions? Maybe I should offload these shorts. But who's going to come in and save me? I have all these short positions that I don't want. Who's going to come and save me? And the banks come in and say, we'll save you. Don't you worry about that. We'll save you. While secretly, they've been accumulating a short position. Right? But if you've been following the commercials, which is what the books tell you, which the experts are telling you, if you're following the commercials, you wouldn't see this storyline. You understand? You see, one of the reasons why you're being misled constantly, they tell you, oh, you should be looking at the commercials because they're the bigger players. They have the bigger money. They give you all these reasons that sound logical, but when you're trying to collect data and use it for your benefit, you see that there's going to be a lot of things that don't make sense. And that's to cause confusion. All right. But when you know what to be focusing on, everything starts to make a lot of sense. A lot of sense. So what I'm seeing here, okay, and I'm just sharing with you what I'm seeing. I can't predict what the market's going to do. What I can do is figure out what has been taking place up until right now. That's what I can do. And what I'm seeing is that banks are offloading longs, acquiring shorts. And then articles are coming out expecting bigger numbers. Why is that? Maybe, what would be one of the reasons why they would say numbers are expected to gain? Why would they make it look positive for the dollar? I don't know. Maybe so that when it comes out negative, it's even more bullish, so that the aggressiveness of offloading shorts is really intense. I wouldn't doubt it, because we've seen this type of situation so many times in the past. And if you follow us on Telegram, you've seen so many times I've been able to correctly and accurately forecast what the data was going to be and what the movement of price was going to be. And it all comes down to just following the storyline. So this is what I'm seeing here, Euro right now, retail traders, 81%, 32,000 lots. Okay. It was in the 60s not too long ago, in the 60s. So this is what I'm seeing with respect to the euro right now. Very aggressive with shorts, looking for a reason to offload them. And I think that very likely it could be the data coming out and being negative for the US dollar. Okay. Another thing I'll point out is just recently we had U.S. jobless claims. Okay. And that came out right here. Right here. And it came out negative for the US dollar, which was positive for the euro. And what do you think that triggered immediately? The retail traders offloading short positions for longs. Right there, okay? But that only brought us down to here, okay? That data only brought us from here to here. A move, but not anything tremendous. So they've already kind of showed us a little bit of their cards, right? Just a day ago. What was it? April 4th, yesterday. They already showed us a little bit of their cards. They already showed us a little bit of their strategy. They already showed us a little bit of what they're up to. So can I say 100% certain that the data is going to come out below 200? No, I can't. But if I had to logically put the pieces of the puzzle together to come to a conclusion, my conclusion would be the data number is likely going to be below 200. Just following along with what they've been up to. All right. So that's what I'm seeing. And a lot of people are asking about gold. We did a whole session about gold. So what's going to happen if this drops, okay, which is what I believe they're setting up for, is a larger drop, which is going to be massively fueled by this event today. I think that gold is likely going to be following along, okay? May not be right now because, as you can see, gold has been extremely strong, right? Last time we talked about gold, what did I say? Wait for a 4-hour buying area and, use that as an area for risk. Well, we had that. Price came down to the 4-hour area, hit it, rallied up. And you can see it dropped. Coming back down to the area, now it's having a difficult time rallying. So we have zones that we're watching for up here and down here. If this zone gets removed, price will rally. If this zone gets removed, likely price will decline. This area will be removed and cause a larger drop. Bottom line is, again, if we look at the bank's positions in gold right now, we can see that they've been accumulating a long position. Okay, beautiful. Yeah, okay, fine. But, let me point out something important. Look at the sentiment. Is this a bright green color, these cells? No, it's not. So you know what that tells me? They're not really aggressive with their long position. Yeah, we got to move to the upside. So what? Okay, so what? Everybody's getting so super excited about this move to the upside. This is nothing. This is nothing, okay? It's not being supported with heavy buying. I can tell you that. And that's what's very clear with the sentiment indicator here for the banks. Even though they're 80% long, the cells are not super green, which means that they're aggressive, that it's sustainable. Remember I told you if you're going to go long, you have to be basing your trades off of a lower time frame? Well, lower time frame is just, they created that demand under 4 hours. Within 4 hours. That's not, something that's going to produce a massive move to the upside. It could continue to propel upwards, but that would require new buying to come in. And you can't see that before it actually happens. You can only see the buying happen as it's happening, right? So I'd be somewhat careful with gold. All right. I'm waiting for it to pull back, and then later on I'll be trading when it's higher probability. Right now for me it's not higher probability. Okay. In the meantime, I would stay focused on Euro US dollar and what we were talking about, and I'm going to be watching very closely to see what's going to happen, because I think that's going to be extremely, extremely interesting, and always a lesson for me to learn. Because, like I said, it's we could put the pieces of the puzzle together and try to determine what is likely going to take place, but we can never know exactly what is going to happen because obviously we don't have crystal balls. But it's uncanny when you follow the storyline of price just how amazingly close you can be to what actually takes place later on in the market. So let this be an example for us to learn from, and who knows, maybe we'll get it dead on right today. Anyways, be safe out there, be good, don't do anything crazy. Let's watch the markets and let's learn from it, and We'll see you again next week, Monday morning, 8 a.m. All right. Hope you guys enjoyed this session. Hit the like button when you get a chance. I would really appreciate it. Take care of yourselves, and we will see you again. So long.